AMD is one of the biggest AI growth stories in the market. Robinhood is becoming much more than just a trading app, and Coinbase is becoming more than just a crypto exchange. But when I look at their current stock prices, the picture changes. One of these stocks is much harder for me to justify than the others, but the other two are interesting for very different reasons. So in this video I'll show you what changed after the latest earnings, what my fair value models say, and which of these three is closest to a price I would actually pay. And by the way, last week I bought two new stocks for my public portfolio using the same kind of analysis I am showing you in this video. I checked the latest results, updated my fair value models, compared them with the stock prices, and only then decided to buy. Because finding a great company is only part of the job. The price you pay matters too. So if you want to avoid expensive mistakes, I recommend watching this video until the end. Let's start with AMD. AMD makes chips that power computers, data centers and AI systems. And right now AI and data centers are becoming a much bigger part of the business. The latest numbers were very strong. AMD's total revenue grew by 50% to about $11.5 billion. But the number I care about most is data center. Data center revenue reached about $6.7 billion and grew by 107% compared with 1 year ago. So this business more than doubled in 1 year. That tells us something important. The AI story is not only about what AMD may do in the future. AMD is already making billions of dollars from this demand. But now let's look at the stock price. AMD trades at around $473. My fair value today is around $274. My 12 months base target is around $304 and my aggressive bull fair value is around $504. So the current stock price is below my bull value but still much closer to my bull case than to my base case. And that is where the problem starts for me. I am not saying AMD has to fall. I am not saying the AI story is wrong. I just want to know what kind of future I am already paying for at around $473. So I looked at the valuation in reverse. At today's price, AMD needs roughly 30% annual revenue growth through 2035. My base case is already strong. It assumes a roughly 21% annual revenue growth. But the current stock price still needs much more. Is 30% impossible? No. AI could become much bigger than we expect. AMD could win more market share, and its new AI chips could become very successful. But keeping growth close to 30% every year for almost a decade would still be an extraordinary result. There is also one more thing in my model. AMD has warrants connected to some large AI partnerships. In simple words, if certain targets are reached, more shares can be created. That means some dilution for existing shareholders. My model already includes that risk. So I understand why investors are excited about AMD. The growth is real, the opportunity is huge. I just need a lower price before I become interested in buying the stock. Now let's move to Robinhood. AMD is mainly an AI growth story. Robinhood is a very different business. A few years ago, most people knew Robinhood as an app for buying and selling stocks. Today, it's trying to become a much bigger financial platform. Customers can invest, trade crypto, use retirement accounts, borrow money, and even trade prediction markets. The idea is simple. Robinhood wants customers to keep more of their financial life inside one platform. And the business is growing. Quarterly revenue reached about $1.3 billion and grew by 32%. Assets on the platform reached about $369 billion. And net deposits reached a record $22 billion during the quarter. So customers are not only opening accounts, more money is moving onto the platform too. That makes Robinhood a much more interesting business than it was a few years ago. But now we have to look at the price. Robinhood trades at around $108. My fair value today is around $34. My 12 months base target is around $37. And even my aggressive bull fair value is only around $70. So Robinhood is trading far above even my bull case. And my base case is not weak. I already assume strong growth for many years and much higher profitability as the company gets bigger. Even with those assumptions, I still get a fair value of around $34. So I looked at Robinhood in reverse too. At today's price, Robinhood needs roughly 38% annual revenue growth through 2035. My base case is closer to 14%. That is a very large gap, and that is what makes the valuation difficult for me. Robinhood is not being priced like a company that still has something to prove. The stock is already being priced for a very successful future, and the business still depends on things that can change quickly. Trading activity, crypto, interest rates, regulation, and investor behavior. When markets are active, that can be very good for Robinhood. But when activity slows down, some of that revenue can weaken very quickly. So I like the direction of the business, but $108 is still the hardest price of these three for me to justify. By the way, before we move to Coinbase, I want to know something from you. How long have you been investing? Less than a year, a few years, or more than 5? Stop the video for a moment and write your answer in the comments. I'll reply to everyone and we can discuss it there. And if this kind of analysis is useful to you, hit the like button and subscribe. I'll keep updating these stocks after new earnings so you can see when the numbers change. The market can change very quickly. Soon these stocks could become more attractive to buy. Or the opposite, they could become stocks I would rather sell before the price falls too much. Now let's look at Coinbase. Coinbase is different. Its current price is well above my base fair value and slightly above my aggressive bull value. Most people know Coinbase as a place to buy and sell Bitcoin and other cryptocurrencies. And trading is still very important for the company. But Coinbase is slowly becoming more than that. In the latest quarter, transaction revenue was around $599 million. Subscription and services revenue was around $555 million. So those two parts of the business are now almost the same size. And that matters. Subscription and services include things like stablecoins, staking, custody, and other services. This can make Coinbase less dependent on people constantly buying and selling crypto. That is one of the reasons I find the business more interesting today. But Coinbase is still very cyclical. Crypto prices can move very quickly. Trading volumes can change quickly too. And we have just seen another good example of that. Crypto prices moved sharply higher and Coinbase stock moved higher with them. That can be good for the business because stronger crypto markets can bring more activity and more trading volume. But one crypto rally doesn't automatically change my long-term fair value. For that, I need to see stronger revenue and cash flow over time. And Coinbase still has significant stock-based compensation. So I use a higher required return for Coinbase than I would for a more stable company. Now let's look at the valuation. Coinbase trades at around $186. My fair value today is around $81. My 12 months base target is around $90. And my aggressive bull fair value is around $180. So after the recent move, Coinbase is trading slightly above even my aggressive bull value. That doesn't mean the stock has to fall tomorrow, but it tells me how much future growth investors are already paying for. So again, I looked at what the current price requires. At today's price, Coinbase needs roughly 30% annual core revenue growth through 2035. My base case assumes around 16% average annual core revenue growth for the next 10 years. So the current price requires much stronger growth than I expect in my base case. But I can understand the bull case. If crypto becomes a much bigger part of normal finance, Coinbase could become one of the main companies behind that infrastructure. Stablecoins could become much larger. Institutional services could grow. Custody could become more important. And Coinbase could make more money even when customers are not actively trading. A strong crypto market can help that story too. That is a real opportunity. But at around $186, investors are already paying for a very strong future. So for me, Coinbase still makes more sense at today's price than Robinhood. But that still doesn't make it a buy for me. I want a better entry. So what is my final view after looking at all three models? AMD is trading below my aggressive bull value but still much closer to bull than base. Robinhood has the hardest valuation for me to justify, and Coinbase is trading slightly above my aggressive bull value. So today none of these three reaches my buy price. But prices change, earnings change, and my decisions can change too. When I see a stock at a price I like, I buy it. And again, I just bought 2 new stocks for my portfolio after I found prices that looked attractive, compare it with my fair value estimates. So check out my latest public portfolio update if you want to see what I bought and why. And coming back to today's three companies, I want to finish with one simple thought. A company can keep growing and still be too expensive for me to buy. I simply want the potential return to be attractive enough for the price I am paying. And I really want to know if you agree with me or not. Would you buy any of these three at today's prices? Tell me which one and why. And write how long you've been investing to. It will be very interesting to see what newer investors choose and what more experienced investors choose. Write your answer in the comments. I'll reply to everyone and we can discuss it there. I also update my fair value models after new earnings reports. So if you want to see when one of these stocks gets close enough for me to buy, subscribe and turn on notifications. And if you want to see what I actually buy with my own money, follow the public portfolio videos. Every real portfolio change will be there. Study investing, apply what you learn, and grow your capital. And always remember that we are here to make money. Everything else is just poetry. I am GP and this is durable profit.